Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do a lot of work in various touch points. This is one of our flagship programs, the roundtables, the mentoring roundtables that have been going on for years and years and years. We started in 2008, and this is the 530th free mentoring session that we are doing, and we get entrepreneurs from all over the world coming to these sessions. So that's the context. The event is being recorded. Every single recording of our roundtables are available on the YouTube channel 1M1M Roundtables. On Twitter, you can follow me at Romana and 1M1M. Today's hashtag is 1M1M. These are the call-in instructions. We're not ready for call-in right now. We are going to spend quite a bit of time today with Shane Neman. I met Shane a while ago in doing his entrepreneur journey story, and I found a lot of interesting insights and lessons in his journey that I really wanted to highlight and showcase for you. So that's what we're going to do for a while today, and then we'll see what else we have time for. Shane, welcome to the show. It's a real pleasure.
Thank you so much. Thanks for having me.
So Shane, let's start kind of with your summary. You started your journey as a solo entrepreneur, which I want to spend some time on. You built 2 bootstrap companies and found successful exits for both of them. So tell us about the solo entrepreneur phase of your journey. And the reason I really want to dig into this issue is there's a lot of bias against solo entrepreneurs in the investor segment, which we're trying to counter. So I want to hear what now that you're also an investor, how you are processing all this. And, I just want to underscore the fact that one of my favorite entrepreneurs, whom I've been tracking for a very, very long time, over 15 years, I met him at a very early stage of his journey. This is Fred Luddy, founder of ServiceNow, who was a solo founder. Today, that company is like 100 billion kind of market cap.
Yeah, he's the ultimate example, right, of what can be done as a solo.
Exactly. So tell us about your journey, how you started as a solo entrepreneur, and how you put one foot before the other.
Sure. So I actually, preceding my solo entrepreneurship, I was I did a failed startup that wasn't a solo entrepreneurship. Out of college, I went to NYU. I actually went to medical school for, I had a degree in computer science, so I did the pre-med track, and I also studied computer science. So during college, I was working as a programmer and doing development work for various companies and some startups in New York City. And that kind of gave me a taste of what it was like to work in the tech industry and make some serious cash at that time, because that kind of skill was really coveted and hard to find, especially during the early web days. But my plan was really to go to medical school, and I went to about half a year of medical school. I went to NYU Med, and I ended up dropping out, getting lured by the startup, glamour, and kind of pulled out of that to do I guess it was. At that time, we didn't have the word for it. It was a blogging system. It was one of the first blogging systems. We called it a content management or publishing system. but I was the lead developer at a company called convey.com at the time that had gotten funding.
What year was this?
This would have been like 1999-ish, 1999,
Okay,
2000.
right before the dot-com crash.
Yeah, like
Mania
2001.
at its height.
Yeah, so I went there for like 6 months, and during that 6 months, I really built out a system, and really kind of we were thinking way ahead. And I had a roommate that was working at Goldman Sachs at the time, because New York City is notoriously expensive for rent. But my roommate happened to be my friend from high school. He was working at Goldman Sachs, and he said, "Listen, there's this crazy technology called Citrix, and why don't there's this idea of creating what's called an ASP, which is an application service provider. At that time, now we call it SaaS, right? So now the terminology, a lot of the terminology that's used now was not in existence in those early times.
Yeah.
So in any case, he kind of convinced me and said, "Listen, leave your job. You be the CTO. I'll get the money and do the business aspect." And we had like another friend or two that could kind of come in and help also. And we went in and did this, and we were I guess 22 years old, and at that time, kind of similar to now, but a lot less, let's say, due diligency, right? And people were just kind of giving away money to anything that had anything to do with .com or being online, or that kind of thing.
There was very little due diligence actually before people were willing to write checks.
Yes. In retrospect, I wouldn't have given me that kind of check, to be honest with you. Uh, but we got like $1 million, a little, almost $2 million, I think. But I wasn't part of like the finance portion of things. I was really the CTO, and we built this company, and we hired people, and we built a platform that was essentially Microsoft 365, right? We called it utilitizing computing because we didn't have the word for SaaS, because you had to pay a monthly fee, like you would pay a monthly fee for your utility bill, right? And you would get your apps delivered to you through a web portal. And we built an apps, essentially what was an app store, because you could pick which apps you wanted for how many users and pay for them on a monthly basis. And we hosted your files kind of like Dropbox. And, it was this whole concept of you could get your apps and your office anywhere you were on any computer or any device by logging into this portal. Suffice to say, because of the .com bubble burst, because of 9/11, because of being way too early for what we were trying to do, there was broadband penetration issues. There was also the psychological issue of businesses getting over paying monthly instead of paying for just like that. They just bought Microsoft Office, and that's how they thought it worked, right? So after that, I was pretty much completely broke, let's just say. I had saved something in the order of, I don't know, $75,000 or something like that I had put all my money into the business. We hadn't taken, and all the partners had, and we hadn't taken salaries. The investors never put in all the money that they were supposed to put in to kind of keep us afloat. And I found myself in a situation where I had really no money. I kind of moved in with my girlfriend at the time to save on rent. And also, it was kind of weird because nobody wanted software engineers because all the .com companies went bust, right? Which is weird now, right? Because there's a huge demand for software engineers. So I found myself, and what was ironic about that is that I did computer science as a backup in case I didn't get into medical school. That was like my backup plan, right? So even your backup plan doesn't sometimes work. So that's pretty interesting too. anyway, so that's when my journey as a solo entrepreneur kind of started. Um, and it's kind of unique because it really is, kind of in an industry that you wouldn't really expect. And at that time, I just mentioned, I moved in with my girlfriend, and she was going to college in New York at the time, and she was, you know, doing, events and nightclubs and that kind of stuff. And I was going to them, and she was working there at those places. Um, and I really had nothing else to do because I didn't have a job and I couldn't find a job. And while I was there, I realized that, the whole event and nightclub and restaurant and bar industry was really backwards. And they were kind of doing things very manually and analog. They had printed flyers that they would give out in front of the places. They had people who would go around with a clipboard and write down your name and phone number to call you, and your address to send you postcards. Um, there was no way of people really finding out on the web about what's going on where. There was like a Time Out magazine just came out, but there really wasn't anything. And that's when the idea for a company named Junebug came up for me. And it really just kind of started as like a website with just listing what events are going on, because I had that insider information, like this day is this place and this is going on, and just kind of starting as a directory and an email list that went on that way. And then it really kind of morphed into an online, what it turned into is something where I was trying to bring the offline events world to online. And what's important to understand is this is pre-Facebook, pre-MySpace, pre-Eventbrite, pre all of that, right? And what it morphed into over time is developing tools for the event industry, like a ticketing system. We created a huge email list of over 1 million subscribers that were young urban professionals that went out. We were one of the first. I am sorry?
Was that all New York City?
So initially it was for the first few years because we were local to there, but then we kind of expanded out to LA and Miami and major metropolitan areas, some Philly and
different cities.
Yeah, so we moved into, as we expanded, we moved into different cities. And one of the things that we did that was really interesting is at that time, camera phones were pretty much non-existent. And having a digital camera was really expensive. So most people didn't have one. There were thousands of dollars. And so we invested in buying those and then going to all the events that were happening, taking pictures at them, sending, literally maybe hundreds of events a week, taking pictures of all the patrons, giving them a card to look up their picture online, right? And then we would do data capture on them, and that's how we, in order to see the photo, you would have to give us your data.
Okay.
And that's how we amassed this huge data.
What's the business model?
So there was the traditional media model where we sold, ads on our website. We sold the photos, the print copies, which was a very, it doesn't seem like it, but we found a way to have a third-party printer, batch take them, and then you can sell them for pretty expensive, and they're very very cheap to make. We actually started doing our own events because we had our own database. So we started storing our own events, and those were really big money makers for us because nights like New Year's Eve and Halloween are nights that everybody goes out. And since we had our own database, we leveraged the database of people that we know go out because we took pictures of them, right? And we knew that, you know, we would ask them information like their age, their sex, their, you know, all this demographic information. So we could slice and dice the data the way that we needed to and target certain people. So we started getting clients like Johnny Walker who wanted to, you know, do Johnny Walker tastings, and they wanted males that were 24 to 42, right? And so we could accommodate those types of things. And so we started getting sponsors, advertisers. So there was a whole ad revenue portion, and then there was a ticket sales portion. And then we started selling these tools to other event promoters, venues, that kind of thing. And that was a little bit over 10 years of my life doing that.
How long of that 10-year journey, how much of that was as a solo entrepreneur, and when did you switch? At what milestone did you switch?
I was always, well, my girlfriend was a minor partner. And so, you know, when we started, so she was a partner, but she, you know, this is one piece of advice is that, in my experience, if you want to ruin a romantic relationship, get into business with you know, your partner, which is what happened with us. Although we were smart enough and civilized enough not to let that ruin our business relationship, because we had too good of a thing going at that time. So we both wanted to salvage that, and we were lucky that we were mature enough to do that. But not too many.
But for the 10 years that you ran this business, you were effectively a solo entrepreneur.
I was. I was running the business, you know, obviously with the help of my girlfriend, who was a partner also, but we were effectively a solo entrepreneur. I had all the tech experience. I was doing all the, you know, initially when I first got started, I was programming all of it myself, right? And it was quick and dirty, and I got a $25 hosting account, and I don't even remember, there wasn't even GoDaddy then, right? Like I don't even remember what hosting company I used. It was some no-name hosting company that I used, and I had to figure out how to get the photos off the camera, because that's, you take these things for granted, right? Like back then, just getting the photos off the camera onto your computer was a long, like complicated process, right? So anyway, I started really humbly. I built my own logo in the very basic Photoshop that I knew, right, on a pirated copy that I had on my computer, that I got from school at some point. I did everything really scrappy, and as much of it as I could possibly do by myself, to learn. And also, I also feel like what was really important about that was that when I hired other people to do things, I was able to really understand whether or not they were doing it correctly or not, because I had done it before, right?
Yeah.
And that was a real advantage that I had for myself. And we started.
Sorry, what kind of revenue level did Junebug get to?
We were doing tens of millions at the end. We were doing tens of millions of dollars in overall sales. That was a mix of both ticket sales and also ad revenue.
And you did all the ad sales and everything on your own?
Initially I did. I remember I got the first advertiser I got was a boutique that was doing a sample sale, and they asked me how much I wanted to send out an email blast, and I said $5,000. I just made up a number, right? Whatever I thought was really expensive at that time. And they were like, okay, come pick up a check and we'll give it to you. We'll do it. We'll send it next week. And I couldn't believe it, right? Like I remember I was walking with like a huge smile on my face to get this check from this place that was like, I don't know, 10 blocks away. And then we sent out the email blast and they did really well. And they were like, we want to do this every month and that kind of stuff. So initially I did, but then we hired a media team to start selling the ads. And to deal with bigger brands, you really need to do that. So
is that an agency that you hired? You still remained kind of like a solo entrepreneur, and you hired an agency to do the selling, because you're saying that you did this, multi-million-dollar business or tens of millions of dollar business as a solo entrepreneur almost.
Yeah, so I mean, we hired, yeah, they were like, there were like 1031 guys that you can, or 1099 ones.
99.
Yeah,
Okay,
1099
got it.
guys can kind of help.
Yeah.
And then, and we, at the end of this, what ended up happening is that one of the, we would send emails a lot, right? And that was a big source of us kind of doing ticket sales and also doing, uh, we would sell the email list to do ads. So there was a whole ad component to that too. And as time went on, the efficacy of email got worse and worse because when we first started, we were the only game in your inbox, right? And then, then spam filters came into play, right? And so we had to fight to stay in the inbox. And then once we were in the inbox, we were one of 2,555, emails that you were getting from the brand, the sponsor, the venue, and like a million other people doing the same thing that we were, right? And plus every e-commerce company you can imagine, right? So I was looking for a way to cut through the clutter at that time. And in 2005-ish, late 2005, 2006, there was the rise of texting in the United States.
Yeah.
And, I started, I had a BlackBerry and, it was easier to text. And I was thinking to myself, wait, how do we, we're sending all these emails. How do we text everyone? We have everyone's phone numbers and they opted in to get communications from us. How do we send them texts? And, I did a couple Google searches and I was kind of looking for a constant contact or a MailChimp type thing that was for texting. And there, like nothing existed. I spent hours that day researching, figuring it out, trying to figure it out. I could find some things in like the UK and maybe in Asia and stuff that was available, but nothing in the United States. And so that took me on the journey of starting Easy Texting, which was initially an SMS broadcasting tool that I built for Junebug to use. And the initial idea was, hey, I have all these clients. I'm going to give them access to this SMS broadcasting tool that we use internally also to send messages to our database, and these other clients have their own database, and they can start sending texts to their recipients, and we'll charge them a fee to do that. And it'll subsidize the tremendous cost of building out this software. That's what I was thinking initially, right? Well, after 2 months, it wasn't just subsidizing it with just a handful of customers. We were doing like $10,000 in profit. And the light bulb went off in my head. And I said, wow, wait, Shane, if this is only with, I don't know, 20 customers or something like that, imagine what we could do with, hundreds, thousands. I wasn't thinking that big at that point. I was thinking hundreds. I took out I opened Excel and I kind of did the math, and I'm like, what would it be like if we had 100, customers? What would it be like if we got 150 customers? And I'm like, oh wow, that's like 100, 200, $300,000. That's a lot of money, right? So I said, okay, it's time to kind of break this out into its own thing, and let's build out this software, build it out so that you can do self sign up. At that time, we didn't have self sign up because we were just kind of giving it to certain customers of ours, right? And
Yeah.
it's time to kind of make it into its own product standalone. We make a website for it. We did SEO and SEM for it and that kind of
Yeah.
stuff.
So, timeline-wise, this uh, in what time frame did you decide to exit Junebug and spin out Easy Texting as a separate company?
So by a year, within a year, I had kind of spun out Easy Texting into its own company, and I found that I was spending a lot more time on Easy Texting than Junebug, quite frankly, because I really liked it a lot more. It was really like up my alley because I love computer science, I love software,
Yeah.
and I also was seeing tremendous success and growth in that company, right? Um,
Yeah.
and that was exciting. It was really exciting. I also saw the TAM being much bigger for that, and the you know essentially what was weighing down Junebug at that time was the advent of social media, right? So
Yeah.
people were finding out where to go through MySpace, through Facebook, and other social media means. So we started becoming less and less relevant, let's say. And so I had an opportunity 2 years after I started Easy Texting, so around 2007, 2007 or 2008, I exited Junebug and I sold it to a strategic competitor of ours. Um,
And
and
did
then
they just come to you? Did you approach them? How did you find that exit?
we actually we were friendly, but we were fierce competitors. And so I approached him and I said, listen, something's got to give. Um, I'd be willing to discuss, selling the company if that's something that you're interested in. And that way, you can get rid of this crazy competitive where we're driving prices up for us for each of us. And we came to terms that made sense for both of us. Because I think
And what level of an exit was it?
um, it was it was a large exit, but we also had, because I was a solo entrepreneur, had a lot of debt, so I was using debt during that time, so I
I
had to
see.
pay down some debt. I had smaller, partners that I had to pay out, and I also had been financing the growth of Easy Texting myself, right, through my
Right.
own money, and I took the majority of that money to supercharge the growth of Easy Texting from there, because
Yeah. Great.
I really believed in it that much, and I was willing to kind of go like almost all in, all chips in kind of situation with it.
And were
Um,
there other people involved in Easy Texting, or were you doing that also as a solo entrepreneur?
no, I did that by myself.
Oh,
But I did hire employees. So I had employee. I didn't have like partners. I was a CEO, and so I had,
yeah.
you know, I hired a CTO, a COO, a sales. We had an inside sales team because there's this whole concept of in SaaS where there are farmers versus hunters. I'm not so we were like we had the farmer model, so we would run ads, funnel people into a free trial of the software,
Yeah.
and then we would have an inside sales team that would call those people and try
Close.
and convert them into paying customers.
Great. So, how long did you do Easy Texting?
So in the first year of Easy Texting, we did about $500,000 in revenue, which was pretty impressive. And
Impressive. Yeah.
and it was growing like gangbusters, hundreds of percent in the beginning. And uh, I did that until 2013, where I exited to another strategic who happened to be a client of ours. They were a large client of ours, and they did the same kind of thing. They weren't solo entrepreneurs. They were six guys that were like tight friends that had started a SaaS company that was like a call tracking software and kind of robocalling software, but for like government agencies and for schools and stuff like that, and emergency calling and that kind of thing. And so they wanted to kind of have an SMS component, and they saw they didn't have that. They were using us as their back-end provider, and then they we worked out a deal to do an acquisition. They did it through a capital raise through Morgan Stanley.
I see. So, how, in terms of the journey with easy texting, how many people did that grow to, and what kind of revenue levels did that grow to in the 7 years or so that you did that? First year was
So,
$500,000 then.
so I kept the team very lean because I didn't think we really needed it, and we were growing organically, and um, we had, I would say, in the beginning, maybe just like 6 people, something like this.
Yeah.
And then we grew our team. So we had two teams. We had one team in New York City, and we had another team, which were a big team of developers in the Ukraine. And we did that as like I don't know if you're familiar with what a cost plus model is, but it's the model where we actually hire those people, we interview them. They're part of our own team. They have easy texting email addresses, that all that kind of thing. They're not really like an outsourced company where we don't, we deal with like one manager and we don't know who's working on our stuff. So we considered them part, easy texting employees, but we had to pay them through a third party, and they did all the HR and all that kind of stuff because there's a lot of complications with having doing payroll in Ukraine and all that other kind of stuff. So we kind of abstracted that away from us by hiring somebody, another company. I think by that time we were probably in the order of like 20 to 25 people, something like that by the end of it. We were doing close to a little bit over 10 million in recurring revenue by that time, ARR.
All these techniques that you are describing of, even when you were doing Junebug on your own and hiring an agency to do ad sales, and in the case of easy texting, hiring a team in Ukraine to do your development work, these are the classic, techniques of building capital efficient company. You can do a lot with being a solo entrepreneur by hiring agencies to do these things. And we are huge fans of these techniques because we are huge fans of capital efficient entrepreneurship, of bootstrapped entrepreneurship. And I will flat out tell you I'm a huge fan of solo entrepreneurship. So which is why it bugs me tremendously when I have to counter this bias, industry bias, that solo entrepreneurs are not popular with investors. And that's when I, point to people like yourself, Shane, and also people like Fred Luddy, who have built very successful companies and found exits and so on as solo entrepreneurs. So congratulations. It looks like you've followed the textbook model of what we teach in 1Mby1M.
I mean, what I am saying to you is a really watered down version of the tremendous amount of sleepless nights and and days and days of work and worry and psychological breakdowns and all the crazy stuff that comes with running your own business.
Of course.
Comes with.
But it's not like those. It's not like those facts are not true when you're running a venture-funded business.
That is
on
true.
top of everything else, you have these investors sitting on top of your head and hitting you like, when are you going to become a $100 million company? And we need you to do that within 5 years, and that's that's also pressure.
There's something to be said by that if you bootstrap your own company, you're only responsible to yourself and you set your own benchmarks. And what is sufficient for you is very different than what is sufficient to a venture capitalist and what they want to see as a return. Thankfully, I ran my business not to run it to sell it. That's eventually what happened, right?
Yeah.
But I wasn't in the mindset of, okay, I'm doing this business and like, I'm going to grow it to this much revenue and then, I'm going to sell it and, or I'm going to do this or that. It kind of happened organically. And I really ran my business for it to be profitable, right?
Yes.
And
you don't have a choice. If you're running a bootstrap business, you have no choice. You have to make it profitable. Otherwise, you go out of business.
Right. So that even, so it's interesting because there were certain things that I could have done to accelerate our growth a lot, right? But I chose not to do it because it would be like highly unprofitable to do, right? And I think that venture-backed companies have the luxury of doing that, right? Because they have a lot of burn, they have runway and burn and all this money behind them. But I didn't have that. And, I don't think that's very normal in the SaaS world, right? But, I was in it in the early stages.
It is actually quite normal because there are tons and tons and tons of bootstrap SaaS companies now.
Yeah. Like I think Basecamp is, right? Like Basecamp's like one of the
many others.
Yeah, and so, you can run the business for it to be your business, and you can run that business for the rest of your life potentially, and make a very good living doing so.
Yeah, well, the biggest example we have in that category is Zoho, which is a SaaS company that is,
we use Zoho. I use Zoho at Easy Texting, so there I know exactly what it is. So there you go.
Yeah. So you sold Easy Texting for how much?
I unfortunately can't say that because it's it was part of the deal not to say how much. But I mean, you can imagine, based on the
$10 million ARR business, I would imagine like $100 million exit.
I can't comment on that, but all I can tell you is that the SaaS companies were not valued until 2013 the way they are now. So I wouldn't go that far, but yes.
All right, fair enough. Fair enough. At least a $50 million exit, I imagine. And you were the sole owner of the company, right?
Yes.
Yeah. Okay. Terrific. So you are investing nowadays.
Yeah, so after that, I stayed for a few years with the new company and I oversaw the integration. We also did a few other acquisitions and that kind of stuff to help grow the business. But then, it was obvious that, my time there was over because I had performed my function. And I, I was looking to do other things. And I think what was really interesting me at that point was looking for other companies and other entrepreneurs, not necessarily in the tech space, in any kind of business, that were, really smart, really savvy, thinking differently, doing interesting things, and, would need not just money, right? But maybe some guidance that I could help with.
Yeah.
So I started doing venture investing. I also started doing real estate investing because I just knew that from previous experience that I had. So I was kind of doing both of those things. I've been doing both of those things for the last, let's say, 7 years or so. So
In that
that's
context, give us a little insight into what kind of tech stuff do you like to invest in? We only do tech, so your real estate investing and non-tech investing is of less interest to us. But within
sure.
tech, what do you like
So
to invest in?
actually, let me tell you something interesting, right? So I did a very seed stage investment about a year and a half ago in a prop tech company, right? So that's interesting.
Okay.
So that kind of
Okay.
married um,
Yep.
both the technology and real estate uh, knowledge that I have. It's called the Resi Desk, and what it does is made for residential property owners and managers.
Mm-hmm.
Like multifamily, like apartment buildings and that kind of stuff. And what it does is it's a central communications hub, kind of like a front for all the residents, throughout all the properties that you own or manage can kind of, it all comes into one centralized place. So if they're texting, calling, emailing, that kind of thing, it comes into one centralized hub. And then all the property managers and their managers can see how things are being communicated,
Wow.
in a central hub. And furthermore, what it does is it gives you AI and analytics to say, hey, this guy in this apartment is probably not going to renew his lease because, you never fixed his toilet from a week ago or something like that, right? And it uses Google Sentiment Engine to tell you whether or not a certain conversation is likely to be someone who's going to churn, that kind of stuff. And it also gives you other AI for prospective tenants who are applying for apartments and that kind of stuff. So
Okay.
that was one interesting thing where I could help a lot because I knew a lot about the messaging world, right?
Yeah.
Because of easy texting, and I knew a lot about real estate, and I've been working with those guys intimately, uh, and helping them in many different respects, from the product to introducing them to large customers that I know that they could possibly use their system. Um, so that's that. I've been doing a lot of kind of what I find really interesting right now, and there's this idea of who's going to disrupt the disruptors, right? Like who's going to eventually disrupt Google, or who's going to eventually disrupt Facebook or Twitter or that kind of thing, right? And the consensus out there right now is, there's this idea of web 3.0, right? And web 3.0 is anything and everything that has to do with the blockchain, right? Not necessarily crypto, right? Like I'm not talking about Bitcoin and Ethereum and the trading of those tokens, right? I'm talking about applications that are built on top of those frameworks, right? That are decentralized, right?
Yeah.
So I mean, if you imagine, a decentralized Twitter, right? Where everyone
Yeah.
goes, and there is one right now. I forgot the name of it, but it's like a really rudimentary version. It's like kind of like it's kind of like what websites looked back when Yahoo was like the incumbent, right? They look clunky in the beginning, and then there's the web 2.0, right? And now everything is much better. But this is like the early stages of that time, right? Um, it's clunky. It doesn't work as well. It's not as thought out as Twitter is, but what's interesting about it is that it's decentralized, right? And before you come in, you know what the rules are, right? And
Yeah.
so you can rest assured that unless there's a huge community consensus, those rules won't change, right? And Twitter changes the rules or bends the rules all the time, right? It's because it's a
Yeah.
centralized system. Um, and there's a lot of power in decentralization. And the thought is that if you could use something that's decentralized and it takes away the incentive of the company that, has centralized it from changing the rules on you constantly.
Yeah.
Most people would prefer to use that eventually.
Okay.
So there's a lot of stuff that I've been looking at in that realm of applications built on top of the blockchain, and not as obvious as like the financial stuff that people are talking about, right? Like DeFi and that kind of stuff. Just stuff that are like much. Go
In
ahead.
that process, have you met any entrepreneur who is trying to merge the world of art collecting and blockchain?
Yeah. Well, I have. I haven't met them, but I've seen some decks and stuff on this.
Well, if you can locate them, can you send them to me? Because I'm looking for entrepreneurs who can. I have a concept that merges those two that I've published, and I'm looking for an entrepreneur team to execute on that.
Well, there's a lot of tech being developed where they're giving you the tools to create your own NFTs, essentially, right? So
No, I'm looking for somebody who wants to run a marketplace, actually,
Oh, okay,
of
yes.
art collectors, but that's blockchain hinged marketplace.
I would imagine things like Sotheby's and stuff will eventually move to that model too, but who knows? Let's see. Like that's they're starting to sell NFTs too, right? These big auction houses are starting to sell them, but and
Well,
eBay just
has
announced,
that bandwagon.
yeah, eBay just announced that they're going to allow you have NFTs. So those are the types of things that I've been looking at. I've done some other kind of, let me think of some other kind of tech. I've done some kind of robotic. I like robotics or anything that can be automated. So there's a company named Robotire that I invested in that does automated uh, tire changes, and have already gotten some traction with some customers, and their technology is solid. Those types of things.
I have an augmented reality company that is operating in the real estate market, so that may be one that I will send you.
Yeah, that's a big thing right now, especially I think COVID accelerated that, right? So, a lot of people now, it's funny, a lot of brokers tell me that what they want now is before they actually physically go to see the place, they want to FaceTime to see the place and then decide if they want to see the place, right?
That's right. Exactly right, but that requires the back end to be viable at scale.
Yeah, for sure. So if you could pre-do that, right, that would be great. So it's like you take one recording, they look it, and then they see if they want to see it or not. Yeah.
Is Neman Ventures your money, or do you have limited partners also?
It's mostly my own. There are certain times when, if I'm doing a larger deal, I'll do what's called an SPV.
Syndicate.
Yeah, I'll syndicate.
Okay. Special purpose vehicles, okay.
Yeah, and it's usually just like friends and family of mine that I know that would be interested in, following along with a certain type
What check sizes are you writing?
I mean, I've written as low as 10,000 to $500,000, depending on how I mean, we've done much larger ones, but at much later stages, let's just say.
So when you do early stage, you're very comfortable with going in really early.
Yeah. So just to give you an example, when I did the ResiDesk one, they hadn't even built the product yet. So I bet I was confident that they could do it.
And you would fund solo entrepreneurs?
I would. I mean, I would have to really be on board and know it. I have no problem with that. I mean, I don't think that, I think that's not even like a thing for me, right? Like I don't I understand that some people think like that, but I don't think like that.
Good, very good. Well, it's a wonderful conversation. I'm
Yeah.
sure our audience would love that, both
What
live as well
one
as the
interesting
recorded thing.
thing, just to add, is that I did bootstrap several of my former employees with seed money because after Easy Texting and after Junebug, they got their own ideas, right?
Yeah,
They saw what was
wonderful.
going on, and I knew how good they were because I worked with them for years. And what
Yeah,
better, what like that's the best
of
place to
course.
ever invest because yeah,
Absolutely. Fantastic.
yeah.
Fantastic. Congratulations. Wonderful journey, really, Shane. I
Thank you.
love your story, which is why I invited you back, and I wanted you to tell the story to a different audience. And
Sure.
we'll keep in touch. We'll probably send you some stuff to look at.
My pleasure. Thank you so much for having me. Have a great day.
Take care. Bye. Folks, we are going to spend a little bit of time just explaining to you how to use 1 million by 1 million. Today we did a slightly different kind of roundtable. I spent a lot more time with Shane just to give you an idea about this solo entrepreneur and very capital efficient journey because I want to counter the solo entrepreneurs to push back from the investors. If you like what we're doing here, please refer entrepreneurs to 1M by 1M, and I'm looking for serious entrepreneurs who have stamina. Everything resource-wise, everything we offer is available at 1Mby1M.com. It's a completely virtual global program. You can access it from anywhere in the world. We have a terrific blog on the site. You will also find the Entrepreneur Journeys series and the Entrepreneur Journeys book series on Amazon. There are 12 books, 12 to 16 case studies each. This is our free strategy roundtables. We have done 530 roundtables. So these are available every week. You can come back as many times as you want. You can pitch only once. If you want to pitch multiple times, you need to be in the premium program, which is where we do the back and forth project-based consulting on an ongoing basis. That's the premium program, $1,000 annual membership fee, extensive methodology guidance, full curriculum, digital curriculum. We help you with business development, financing, strategy consulting, and media relations. Go look at the self-assessment on the website. These are the due diligence questions. Our bootstrapping course, free bootstrapping course, is a very good starting point if you haven't encountered 1M before. Just get to know the philosophy and the way we deal with things. And if you are getting stuck in the due diligence questions, 1M Basic is a great place for you to go, plug your knowledge gaps. So dig around on the website, look at premium, basic, what do we offer, how do these programs work, look at the messages, video messages, FAQ messages, the curriculum description. It is a case study-based program. You just saw me take a case study, Shane's case study, and show you some important points that you need to take into account. We do introduce you to investors. We work with hundreds of investors, and the investor introduction policy is available on the website. Our methodology is lean, capital efficient, bootstrap startups, and our philosophy is bootstrap first, raise money later. The mantra is do not go to VCs as beggars, go as kings. That's it. We have roundtables every week for the moment. No change, no gap. If you have questions, we can take questions now. You can type it in public chat, send to everyone, or you can dial in. You can activate your audio, computer audio, whichever way is fine. Let me introduce you also to Irina Patterson. If you have questions about the 1M program, Irina would be your contact person. That is all we have today. Anybody, questions? Questions, comments, introductions? If you would like to introduce yourselves and tell us what you're up to, you're very welcome to do that. No? Very shy, quiet group? All right, I hope you enjoyed the session today, and I will see you next week. Bye, everybody.